quick check on crypto prices as we begin the so-called month of October with strong gains. Traders are betting of a rebound after one of the harshest sell-offs in months. Cryptocurrencies shed roughly $300 billion last week as a wave of leveraged bets unraveled, but things may be looking up this month, with Bitcoin ending in the green in the last 6 Octobers.
One of the largest TradFi sources out there, which is Bloomberg, comes out with a video talking about it is so-called month of October, which we all know that in crypto to be real. It is here, and we're already starting to feel that. Uphold posting their new post here about their card says some cards give you points, some cards give you air miles. This one gives you more XRP than anyone else. Now, as we can see, the United States federal debt is at its highest peak of all time right now. But the question is, and just like that, WTF happened in 1971. So let me know down in the comment section, do you know what happened in 1971? If you answered that President Nixon's shock ended the dollar's convertibility to gold under the Bretton Woods system, shifting to fiat currency and freeing the government from gold reserve constraints on spending, you are correct. Yes, that is correct. What happened in 1971 is that they did lift it from the gold standard to the fiat dollar. As you know, the fiat dollar continues to lose value ever since that day, actually. Lost tons of value as we continue to inflate the United States dollar, unfortunately. But crypto is here to save this, so we'll see what happens and how this plays out in the future. Breaking, U.S. banks are now sitting on $395 billion in unrealized losses as of Q2. Now, as you heard in the intro, I talked about this. They are trying to stop the stablecoin scenario from coming out. Banks are already losing money. Now imagine when everyone is running off of stablecoins and no one even needs to hold their money in a bank where they can charge you these fees for wiring money to and from here and there. They're going to be in even more trouble. So they really do not want this stablecoin legislation to pass. And the reason it matters for us in crypto is banks are cornered right now. Higher rates mean that they're paying more on deposits than they earn on assets. They're squeezing profits and raising failure risk. Remember the SVB, Silicon Valley Bank? Does that ring a bell? What happened to Silicon Valley Bank? That doesn't even exist anymore now, does it, ladies and gentlemen? So this pushes them towards alternatives like crypto reserves or tokenized assets, which is what we're looking for. And XRP's privacy play is trying that right back in. So for us, it's bullish for Bitcoin as a hedge. Bitcoin's now reaching all-time highs above 125,000. Which now Bitcoin to people, that's screaming safe haven for people rather than what it used to be safe haven, which is gold, which did also hit new all-time highs. But a lot of people are liking that digital gold now instead. And if the feds do cut rates, well, then the losses for banks will soften and they'll get less, but volatility spikes short term. So as you all know, Ripple has applied to be a bank and Ripple has its own stable coin right now. But did you know that Ripple is going for ultimate security and they want to help provide and basically bail out the banks with this option? So recently, this gentleman over on X was at a meetup and Brad Garlinghouse was there and he asked him the question. That question being, what's next for Ripple and XRP? And Garlinghouse's answer highlights what many in the XRP Ledger community already see as the final gap in the ecosystem. So the network has introduced decentralized identifiers or DIDs, on-chain credentials, and permission domains to bring compliance into the picture. And as of just recently, it now supports multi-purpose tokens or MPTs for efficient tokenization, along with native decentralized exchange that combines automated market maker liquidity with an order book. As we see in this post referencing it again, he says, I asked Brad, hey, what's the path to a more institutional adoption on XRP Ledger so that institutions are comfortable with sharing transaction hashes with us? He said privacy. And that privacy layer includes lending and borrowing functions under proposal XLS 66, where institutions could tokenize real world assets as collateral, while zero knowledge proofs, ZKPs, keep balance and transfers confidential. And privacy here is not about secrecy from regulators, but allowing institutions to protect their own sensitive data from competitors, their intellectual property, while still providing compliance on chain. So trillions of dollars for private XRP. And Ripple's senior director of engineering, Ayo Ankeli, recently pointed out that trillions in institutional assets are likely to move on chain in the coming decade. And privacy will be that central to making that happen. So in theory, institutions can then come in on chain, get issued on-chain credentials like KYC and AML, participate on the DEX with other users with the same status, put real-world assets as collateral in the lending, and then protocol and XRPL, other institutions borrow against the collateral, fully private with encrypted balances and transfers. And remember, we just talked about this with Jazzy Cooper, product development management over at Ripple.
We're introducing a new lending protocol to the XRP ledger. It will allow for credit origination on chain. And the way that it works is basically users can deposit capital into a single asset vault and receive a share token, just like, one side of the automated market maker. And then essentially you can have what's called a loan broker that will create a new loan for a particular borrower. And that will remove liquidity from the single asset vault and create a fixed term interest bearing loan.
So very exciting times ahead for XRP, but some very scary times ahead for the average everyday person living in this economy. The illusion of prosperity is breaking. This is why people need to be in crypto. I tell my friends, I tell my family, I tell everyone I can, you need some crypto because the dollar continues to devalue. Well, stocks are up 40%. So if your family has a 401k or something like that, that's great. Gold is at $4,000. Bitcoin is at $125,000. But the dollar is down 10%. And this isn't growth. It's what they call a flight from fiat. People are trying to get out of the dollar as fast as possible. The Fed is cutting rates into inflation, printing credibility while calling it policy. When gold, Bitcoin, equities, and real estate all rise together, it's not a bull market. It's a monetary panic in slow motion. Asset prices are screaming what officials won't say. The denominator is dying, the denominator being the dollar. The bottom 50% now holds 2.5% of the United States wealth. AI is building empires for few while the currency dissolves beneath the many. Data centers go up, purchasing power goes down. This is not a boom. It's the end game of a system priced in paper and powered by illusion. What a great post by Shanaka Anslam Pereira. And that goes back to what we were talking about here. Once we went off the gold standard, this all started to go awry. So what are the big players in the market doing? How about $2 trillion Morgan Stanley has officially given the green light for 16,000 financial advisors to start pitching Bitcoin to clients. Ladies and gentlemen, if you've ever wanted to break into being part of Wall Street, you might be able to get a job. You're probably a genius on crypto at this point by watching all of these videos, buying and selling crypto along the way, learning the way this works. You're probably good enough. You probably have the most excitement than anyone else. You can go work at Morgan Stanley right now and sell the crap out of Bitcoin to their clients. A little bit of bad news going out there for those of you guys that are really excited about Aster, as a lot of us are on the channel and inside of Altcoin Pro University. Well, right now, DeFiLlama has decided to actually remove Aster from their volume. And the reason being is trading volume on Aster, which is linked to CZ, which is the co-founder of Binance Crypto Exchange, is now mirroring Binance perp volumes almost exactly. The correlation ratio between Binance and Aster trading volume is about 1, which is way too minimal if you know what I'm saying. Aster doesn't make it possible to get lower level data such as who is making or filling orders. So until we can get the data to verify that it's not wash trading, Aster perpetual volumes will be delisted. Aster recently busted onto the scene, emerging as a competitor to Hyperliquid, a decentralized perp crypto exchange, in September, and has captured the narrative attention from the crypto community due to CZ's ties with the platform and popularity of Hyperliquid. Open interest on Aster surged by over 33,000% in less than 7 days during the week of September 24th, signaling significant demand for perpetual future DEX and putting its trading activity on par with Hyperliquid. Aster's price can still grow by 480%, putting its price around $10, market analyst Marcel predicted in September. Aster already flipped hype in daily volume and in daily revenue.